Hey everyone, welcome back to Corporate Decoder, the place where we break down the most confusing financial documents and make them easy to understand. In this episode, we're diving deep into ORIGIN Ltd's latest filing with the SEC. And let me tell you, this one's a wild ride, especially when it comes to their crypto and financial dealings. ORIGIN Ltd has been in the crypto mining game, but things have been a bit rocky to say the least. They've even paused their US mining operations due to high costs and are now exploring other avenues including Dogecoin and cloud computing hardware. This filing gives us SEC filings. Make sure you're subscribed. And join our Discord community linked in the description below where we break down these filings even further. This prospectus is essentially ORIGIN's roadmap for selling a massive amount of their Class A ordinary shares, almost 1.2 billion of them. They're doing this to basically let existing shareholders sell their shares, which means the company itself isn't getting new money from this particular offering. It's all about letting others cash out for a bit. Now let's get to the juicy financial numbers because that's where the real story is. For the year ending June 30, 2024, ORIGIN reported total revenues of about $2.9 million compared to $6.3 million in 2023. That's a pretty significant drop of almost 54%, losing more than half their revenue in just 1 year, likely due to those paused mining operations. But here's the kicker. Their cost of revenue also dropped, but not enough to offset the revenue loss in 2024. It was $3.8 million down from $10.8 million in 2023. This means they were spending way more on operations than they were earning from their mining activities, making the business of mining itself quite unprofitable for them. And the results speak for themselves. Their loss from operations in 2024 was around $14.8 million, a slight improvement from a $28.3 million loss in 2023, but still a huge loss. The company is burning through cash. They also took a massive hit with impairment losses on their mining equipment with a staggering $6.5 million, $16.7 million loss in 2024 and another $16.7 million loss in 2023. This tells us the value of their mining gear plummeted so much that it's now considered almost worthless in accounting terms. This big drop in asset value also shows up as an impairment loss of $6.5 million in 2024 and a whopping $16.7 million in 2023 for their mining equipment. Essentially what they paid for this equipment is no longer reflected on their books because its current value is way lower and they had to write off that difference. A look at their balance sheet shows us where their financial health stands. As of June 2024, their total liabilities were about $5.8 million, which is a significant improvement from over $13.3 million in June 2023. This suggests they've been working to pay down debt, which is a good sign. On the asset side of things, their total assets were around $6.7 million in June 2024, a big drop from $13.3 million in June 2023. This decrease is largely because the value of their plant and equipment and long-term investments got written down significantly, which we saw in those impairment losses. Overall, for the year ending June 2024, ORIGIN reported a net loss of about $18.3 million. This is an improvement compared to the $28.2 million net loss in 2023, but it's still a substantial loss for the company. Their cash position also tells a story as of June 2024. They had about $1.4 million in cash and cash equivalents, a big jump from just $16,000 in June 2023. This likely comes from the various financing activities they've been undertaking. More on that later. Despite the huge improvements on liabilities, the company's overall financial picture is still concerning given their historical losses and the significant impairment of their mining assets. The shift from mining to becoming a sales representative for Accession for Aether miners shows a clear strategy change in response to the challenging crypto mining market. They've clearly stepped away from their core crypto mining business due to profitability issues and are trying to diversify their revenue streams into areas like selling mining hardware and potentially other blockchain technologies. The Dogecoin treasury strategy is also an interesting move to diversify their holdings outside of just Bitcoin. However, the company is still facing significant risks, including their reliance on volatile crypto asset prices, ongoing regulatory uncertainties, and their substantial accumulated deficit, which means they've lost a lot of money over time. The recent financing deals, although crucial for survival through convertible notes and equity purchase facilities, also highlight their need for external capital to keep the lights on. The company acknowledges its material weaknesses in internal control over financial reporting, primarily due to insufficient accounting personnel with expertise in complex accounting matters. This is a red flag for investors as it can lead to inaccurate financial reporting. Conclusion-wise, Origin is in a tough spot. They've pivoted their business model away from mining, which seems sensible considering the market conditions, but they're still dealing with the fallout from past operations like those equipment impairments and the ongoing need for financing. The new business direction with Ether miners and the Dogecoin treasury might offer some upside, but the company's ability to generate substantial revenue and achieve profitability remains a major question mark. What are your thoughts on Origin's strategy and their financial health? Will this pivot towards sales and Dogecoin be enough to turn things around? Let me know in the comments below. If you found this breakdown helpful, give this video a like and subscribe for more corporate deep dives. And don't forget, join our Discord community for more real-time insights. We'll see you in the next one.